Good afternoon. My name is Sophia Chan Combrink, and I'm the Executive Director of the Canadian Chamber of Commerce here in Hong Kong. Welcome to our webinar today, Hong Kong Real Estate, Time for Tokenization. So a little bit about the Chamber. We're a nonprofit, non-governmental organization created in 1977. We have over 1,200 members representing nearly 300 companies, making us one of the largest Canadian business organizations outside Canada, and one of the most active international chambers in Hong Kong. For non-Canadians listening in, it is important for you to know that we are an inclusive and diverse community. In fact, about 40% of our membership are non-Canadian, so everyone's welcome. Please consider joining. So what do we do exactly? We deliver 4 services to our members. That is 1, representation and advocacy engagement. Of course, business promotion, networking, and brand exposure, learning and training, which is what we're going to be doing some of that today, and information and insight. Today, we're bringing you a conversation about real estate and tokenization. During the session, if you'd like to submit questions or comments via the chat box, please do so. I think we're all familiar with how to do that, so thank you. I'd like to pause and acknowledge some key members of our community who are participating in this morning's event. Max Berger, longtime member of the Chamber and the chairman of Golian Limited, an investment management company providing equity and debt to enterprises in the FMCG, fast-moving consumer goods space. A few more. Olivia Dong. Olivia is partner with Weir and Associates, and she's been a speaker at the Chamber about immigration issues and taxation issues. Andrew Work, a well-known Canadian in our community, not only because he was in my role for several years, but he regularly hosted our annual ball. He's editor-in-chief with Harbour Times and also the exec director with Self Storage Association Asia. Yongki Hong is partner with Dwyer Lynch and Company, and they are chartered valuation surveyors and agents specializing in the Hong Kong commercial property rental market. So if you're new to CanCham Hong Kong, you would like to subscribe or even join as a member, feel free to contact us on our website, cancham.org. We have a number of other events coming up, and we'd like to welcome you to those, so please stay tuned. May I please hand it over to now Janice Yao, partner at Stevenson Harwood, who is your moderator for today. And I look forward to joining this webinar and learning more about tokenization and real estate. Thank you to all of our speakers as well. Janice?
Thank you, Sophia. Big welcome to our audience and, of course, all of our esteemed speakers who will be discussing whether or not it actually is time for real estate tokenization in Hong Kong. My name is Janice Yao. I'm a real estate partner at Stevenson Harwood, keen to help bring technological advances to an age-old asset class. On our panel today, we have Scott Teal of DLA Piper, the lead partner for Toko, a platform that delivers token offerings at scale. Scott, please tell us a bit about you and your experience with real estate tokenization.
Thanks, Janice. Great to be here, and hi everyone. So, as Janice said, I'm a partner at DLA. I'm actually a technology lawyer. I'm not a real estate lawyer, so I'm the odd one out on the panel. My background is very much in computer science and technology-related legal issues. I've been sort of leading the firm's development of the Toko platform, which is a tokenization engine and digital asset management solution that we've been building over the last couple of years and have recently launched. So it's been great working with colleagues in not only the corporate finance but also the real estate space to start to bring the reality of a digital capital market to Hong Kong and indeed other markets around the world. So pleased to be here.
Thank you, Scott. We also have Shashila Rivers from DLA Piper, who is the co-chair of the Global Real Estate Sector, head of the Real Estate Group, and the Hospitality and Leisure Group for Asia Pacific. Shashila, please kindly tell us about yourself and how tokenization can help economic recovery from the current COVID downturn.
Thank you, Janice. Thanks, everyone. Thank you, Canadian Chamber. You are quite right. Tokenization is a buzzword. People talk about it. People don't fully understand it. And I think what you say, Janice, with tokenization, the big part of it is technology. So technology brings an aspect to owning real estate in a new way. So I think we'll talk a little bit more about this in the Q&A or the panel discussion that we have. But hopefully tokenization will be a little bit more familiar at the end of today's session.
Thanks, Shashila. And last but not least, we have King Leung, Head of FinTech at Invest Hong Kong. King, please share with us what Head of FinTech means and the role of Invest Hong Kong plays in attracting foreign direct investment.
Okay, thank you very much. It's a great pleasure to meet all of you online. So basically, Invest Hong Kong has been around for over 20 years in helping the overseas companies to get to know more about the Hong Kong economy. In particular, for the FinTech space, our team was established back in 2016. So the role is really to help international folks to understand how to basically leverage on the environment we have in Hong Kong and do business. Now, and there's another hat that our team wears, and that is to foster the developments of FinTech in Hong Kong. So that basically encompasses everything from working more closely with corporates, with the investors, with the regulators, other partners like Port, Science Park, to basically help the community understand better about where the resources lie. It can be investment, it can be how to get connection with the right clients, it can be to access the various government subsidy schemes. So in a nutshell, what our team at Invest Hong Kong do as a government departments of the Hong Kong SAR governments is to be the sort of single point of contact as a conduit to connect FinTech players to the right resources. So that's what we do.
Thank you, King. That sounds like a very important role that you play for Hong Kong there. We are moving to a digital economy where financial and physical assets will increasingly have digital representations of their value. So before our panel discussion, we will have Scott first teach us a bit about what tokenization actually is and how it is relevant to real estate. Please take it away, Scott.
Okay, thanks, Janice. I'm just getting the presentation up. And okay, so thanks everyone. So we'll just do a quick overview for around about 10 minutes of what real estate tokenization is, and perhaps more importantly, why it's going to bring some advantages to both the investor and also the asset owner in terms of creating new marketplaces and new opportunities. And I think it's particularly relevant at a time in Hong Kong where real estate's obviously a huge asset class. It's a very expensive asset. It's something that many people aspire to participate in, and obviously it's been a relatively challenging time of late as well. So what is tokenization? There's a whole presentation that can be given on this, and there are many different ways of looking at it, but essentially it's a way of fractionalizing an interest, taking an asset or indeed a number of assets, and then breaking it into pieces, and then having those individual elements of the asset being represented in a digital form. And more importantly, and this is where blockchain technology kicks in, recording that interest on a blockchain or a decentralized ledger. A decentralized ledger doesn't require central trusted authorities, things like land registries, to use an obvious example of a differing central registry system. Decentralized systems have the ability to keep an accurate and consistent record of things like who owns what, but in multiple copies across multiple machines and computers and countries in a way that doesn't require that central authority. So we do already have some examples of fractional interest in real estate. So REITs, ETFs, mutual funds. There are obviously examples of all of these that in one way or another provide people with access to fractions of individual assets. However, the ability to now use blockchain technology and tokenization technology, we believe, and I think we will certainly see, is going to create a lot more flexibility, security and transparency, and indeed more creative products. So the advantages then of tokenization from the perspective of an asset owner, there is the potential for increased liquidity and spreading of risk. So taking your asset, attracting new investors to it, and providing them with the ability to buy and sell those interests in a way that perhaps those other structures such as REITs and ETFs don't really provide the level of liquidity that we would aspire to. Uniquely structured offerings is one that I'm particularly interested in. So again, if you look at a lot of REITs and funds and ETFs, they're essentially bundles of real estate assets, and people can buy a unit in or a share in and participate. There are options with security tokens to create much more specific assets that are highly relevant to either a particular property or even an individual unit within a particular piece of property. So it's kind of like unpicking. I think a lot of the traditional investing is done in funds or collection of properties. Actually, the security token will allow us to actually take a very small and specific piece of an asset, or indeed a part of an asset. And that will allow the creation of products that frankly don't exist in the market today. It'll bring in alternate funding sources, and from the flip side of that will be an opportunity for more investors to participate. There are going to be lower costs. Security token offerings are going to be more efficient, lower stress, lower disclosure requirements, less rigor than IPOs. Some of the compliance activities can be automated through the smart contract, and lower fees as well. It's also an asset class that ultimately will be borderless, although that is challenging given that security tokens are in fact regulated, and as they do move across markets, they do suddenly reside in different countries with different laws. And settlement times, again, with some of the next generation DLT layers, including things like Hedera Hashgraph, which we've built into our Toko product, settlement and finality can occur within 2 to 3 seconds, which is obviously significantly faster than the typical conveyancing life cycle. From an investor's perspective, there are potentially much lower barriers to entry, lower bite sizes. These are going to be assets that are backed. You know, these are going to look a lot like a cryptocurrency does. The technology is in many respects quite simple. A crypto, an unregulated, unbacked cryptocurrency is a simple version of a security token, but because they're asset backed and they are therefore likely to be less volatile. The trading platforms like we see with cryptocurrency exchanges, as these things come online and we start moving these assets onto online exchanges, they'll operate 24/7. They'll be very, very efficient. They'll be very low cost. And again, settlement times will be far quicker than what we're used to even with stock exchanges. There's also an advantage to both sides around reducing some of the friction points and taxation points and cost points in the ecosystem and the life cycle. So this is a bit of a virtuous circle, but if you start with, we'll maybe start at the bottom right around land registries. The types of token models we've been building can avoid the need for a change of ownership at land registry level every time an individual interest in that land, or as in an individual token, is sold. So you don't have to necessarily bake legal and equitable rights into the token, and therefore you don't have to record when there is a change of those. And equally, you don't have to pay the stamp duty associated with such transfer. Similarly with tax authorities, the ability to move those stamp duties at that level, and also the company's registry level. Some people have been looking at tokens that are effectively digital equity, so digital shares. Again, if a token is a digital share, every time somebody trades it from one person to the next, then you have a change of shareholder. Typically, companies' laws, including here in Hong Kong, do require you to then update the share registry in terms of who owns those shares. And again, that attracts similar sort of stamp duties and taxes associated with that change. And the final point on this is that there is now going to be a transparency of asset ownership. The immutable nature of blockchain technology means you'll be able to track every single interest, every single transaction instantly for free online in a way that currently has to be done through things like land registries. So the Toko platform that we've built, and it is a digital asset creation, but also more importantly, an asset management solution that allows all of the participants in the ecosystem to come in, to create the digital asset, to trade in it, to buy it, to sell it, to distribute it. And the purpose statement now, why, if you like, behind the Toko project has been all around empowering value creation. We see enormous amounts of friction in current creation and distribution of assets. We see frustrations, we see illiquidity, we see people struggling to do secondary financing because of the existing structures. And so we're looking to really support that. It can spit out tokens on a wide variety of asset classes. So it's somewhat agnostic in terms of it could be real estate. As we'll see later, we're also looking at a number of other asset classes. It can use smart contracts to deploy onto different layers as well. So people will have probably heard about the Ethereum platform, which is where the vast majority of smart contracts today have been deployed. Obviously, our Toko engine can do that, but it's also been looking at issuing smart contracts and indeed tokens onto other platforms, including Hyperledger Fabric and Hedera Hashgraph, for example, which we think are going to be better suited to the creation of a truly effective and low-cost digital marketplace. The other functions of this include the full life cycle of the token, so the ability to issue it, to transfer it, to redeem it, ultimately to claw back these transactions and to pay out. Some projects will have a finite lifespan, whereas some may be perpetual. We're also, although this functionality is yet to be completed, but we're also looking at using the technology to streamline communications, due diligence, and information flow, both at the original sale point and also in the subsequent life cycle, so the asset management piece. And I think that's going to be really interesting in the context of real estate, because you have these quite complex real-world assets, lots of information about what's happening in the building, what's happening with the rental, what's happening with the costs, what's happening with the refurbs, all of these types of things. And this technology can be used to provide a greater level of data democratization or information dissemination than perhaps we've seen traditionally in the market. And that's going to create a real opportunity, I think, for certain projects to stand out. Not all asset owners are going to want this, but I think we might see those assets who do want this being able to differentiate themselves in the market by providing that greater level of transparency. Obviously, Toko, it sits in a subsidiary of DLA Piper for regulatory reasons and the need to separate law from non-legal services, but it's typically deployed in combination with the DLA Piper, legal services, and that provides a degree of assurance that I think is differentiated from other technology tokenization solutions in the marketplace, where we're able to provide a level of comfort around the accuracy of the smart contract, as well as obviously traditional contracts, which would usually be in the form of investment documentation and white papers and things like that. We can also provide the assurance that the automatic parts of the smart contract in the token are actually executing in a manner that's consistent with those investor rights. Just want to quickly highlight this project. Some people may have seen it, but as part of the launch of Toko back in November at Hong Kong Blockchain Week, we commissioned a piece of art. This is the piece of art from a Beijing-based artist, Wang Xiaobo, and he produced this piece of art for us, which we subsequently tokenized. The investors in this case, it was something of a test case, well, Sushila was one of them, but some of my other partners and colleagues here in the Hong Kong office of DLA Piper. We used the technology to create a non-fungible token. So the non-fungible token in this case was an Ethereum 721, where we built into that token template a fraction of the piece of the artwork. So we actually chopped the artwork up, not the real artwork to be sure, but a photograph of the artwork was then broken up into 16 different pieces, and each of the 16 tokens that were minted had an individual piece of the painting put onto that token. Now that made them non-fungible in a sense. They are all unique tokens. That's obviously different to what we could have done. The economic rights and the rights of use and the rights of return are all identical, but they are unique and they have a different picture built into them. Now this was something of a test case, but it was quite interesting how immediately on the allocation of the tokens, there was an immediate marketplace was created with some of my partners looking to trade their token because they liked a different part of the painting to the one they were given, for example, even though the economic interests were the same. Now, this was something of a thought experiment, and obviously to prove the technology, to show that Toko worked, and to do some experiments around custody and other issues associated with these digital assets. But if we take this thought experiment and then scale this into maybe the real estate context, where you might have the ability to take a building, but rather than just issuing a fraction that represents, a 1/10,000th of the entire building, perhaps you could have some tokens that represented individual units within that building. And you obviously might therefore pay more for the top floor with the view of the harbour than you might with the ground floor with the view of the car park, for example. So it was something of a test to show the technology, but also to get people to start thinking about the ability to create these very unique products in digital form that could then be traded and have individual values potentially assigned to them. So quite an interesting project, and we've had a lot of interest from asset owners and intermediaries since we launched Toko, and this was our test tokenization, the first one that we did. Obviously, it's not just real estate. We are looking at multiple other asset classes, fine art, as we just saw with the finding the light picture, intellectual property rights, debt, funds, shares. We're talking about reinsurance risk and insurance liabilities, and ESG as well. So One of the things that I think we are, and Sheila will maybe come onto this in the Q&A section, is looking at building in some additional value into, say, a real estate tokenization project. How do you build in ESG credits for a project that does have good green credentials, for example? And these are the types of things that frankly don't exist and we haven't seen in the market today. But this blockchain technology and technology using security tokens will allow us to start providing additional rights and additional benefits to not only the issuer, but also the investors. So that was, I concede, a very high-level whistle-stop tour, and I think I already, as it was, went over by a couple of minutes. But hopefully that's provided a little bit of a useful whistle-stop tour of the key aspects of tokenization. So I think it's back to you, Janice, to lead the Q&A.
Thank you for breaking it down for us, Scott. It's very informative. It's a lot to take in for sure. How does this Toko platform fit with sort of digital assets in Hong Kong and with SFC's plans? I mean, has the SFC given clear guidance on how tokens are to be regulated under the current Hong Kong laws? Are they legal here? Are they, can we play?
They are as of really only a couple of months ago. It wasn't that they were illegal here, it's just the ability to deal with security tokens is regulated. So the ability to advertise, to distribute on behalf of third parties, to run digital asset exchanges, these types of regulated aspects of running a marketplace are certainly regulated, if indeed the token itself is a regulated security. And not all tokens are regulated securities. People will have heard about the ICO boom of 2017. Well, in fact, there are a number of other cryptocurrencies and ICO projects that are ongoing that we're working on, and Toko can spit out an unregulated asset just as well as it can a regulated asset. The technology is broadly speaking exactly the same. The legal assessment is quite different. But for the type of real estate backed kind of investment type token that we're probably really talking about in the context of this session, I think it's fair to say great question in from David, I'll pick that up. There is I think an assumption that the vast majority of real estate tokens would be regulated securities. So we haven't got any new law in Hong Kong, nor do I think we need any new law. The SFO regulates securities regardless of whether they're digital or not. The SFC has issued a range of guidance around this. One of the challenges being getting more players in the market that are licensed to do this. We had a consortia that we put together last year, and we were working the SFC sandbox to help promote the development of the Hong Kong ecosystem. I'm pleased to say that one of our consortia members, OSLBC Group, they have in fact now got the first license in Hong Kong to do digital broker dealing and indeed to run a digital asset exchange. So it's now fully licensed. There is in fact a route to market. So yes, Hong Kong is now a market in which you can issue, distribute, and indeed ultimately put onto an exchange these types of assets that we're talking about. It doesn't make Hong Kong the first market in the world to do this. There are already several in the world that are ahead of the game, I think, and have had these sort of regulatory framework in place and licenses issued for a longer period of time. But it's equally relatively new in that there are a lot of other parts of the world, the Middle East, for example, where we're working with parties there that still haven't got as far as Hong Kong got. So it's not the front of the pack, but it's a relatively early adopter, and certainly we now have a framework that works.
Great. So that's tokenization sort of opening up new markets for new investors. But I mean, it sounded from your presentation, Scott, that the benefits of real estate tokenization are more for investors who haven't been able to participate in real estate investments yet. So Sheila, can you tell me what about the existing players? Why should the big real estate investors and the funds that are already playing in this space, what's in it for them? Why should they care about tokenization?
I mean, they should care about tokenization, and I'm not saying that it creates a new sort of class of investors, not at all. I think the best players in real estate are the ones who've been investing in real estate all this time. So in Scott's slide, he sort of set forward the reason what tokenization is and the reasons why tokenization is attractive. And perhaps let's rewind and look at how people invest in real estate today. So sort of investors, both retail and professional, they invest in real estate directly. They may buy some interest in a fund. They might go into the listed space or the REIT space. So that is how people invest, and it's a good way. There is nothing wrong with that way. And I think the real game changer now is technology, Janice. What technology brings is three elements. So so if the game changers are one, technology, because technology brings automation and the blockchain technology. Two, actually it's sort of unprecedented liquidity. There's a lot of liquidity in the market. You can discuss the reasons why there are, but the question is, how do you then enter into this real estate space? And professional investors have a route to do this, and tokenization perhaps brings a new kind of efficiency. So let's talk about that in a minute. So it's the same kind of investors, potentially ultimately retail, but that will take a little time for retail investors, but still professional investors. And the third thing is, I think this sort of shared economy has brought together a different way of enjoying real estate in a shared way with more than just traditional interests. Perhaps what tokenization brings, not just debt or equity interests in the way we understand shares or debt, but perhaps rights attached to real estate. And tokenization is flexible enough to do that. So that would be the three reasons why there are game changers today. And if I can summarize what Scott said in relation to why tokenization is attractive for real estate, I have perhaps 5 or 6 points. One, fractionalization of real estate is not new. It's been around because there's a real high cost of entry. So you need to share the way in which you own real estate. So that's the same for tokenization. And with blockchain and technology, it sort of hopefully brings a degree of efficiency. That's what it brings. It also brings operational efficiency, and that might be quite attractive for asset managers or managers of real estate, because you can bring about smart contracts, and Scott talks about TOCO, because perhaps the way in which the binary nature of rights sit can be codified. And ultimately, that codification that sits in a smart contract can sit on a blockchain and leads to operational efficiency. So that's a biggie with smart contracts. The third one is you want speed. Everything is about speed today. And although in the listed space you still want a market that prices it right. And hopefully with the transparency of the platform and blockchain, you can get some pricing. There will be new ways of doing this. And don't forget, this is technology being brought forward to help people do something they've done for a long time, which is investing in real estate. So I think sort of reduced settlement times, perhaps data transparency of ownership, and Scott went into some detail as to how we have these well tried and tested ways, whether it's land registry or company house. But I would suggest that debt interest in tokenization or any kinds of other enjoyment of tokenization rights could be easily tracked through technology. And so that's that flexibility element. And I will say again that the liquidity is important, because whoever invests in real estate needs to know that there is a market to do this. And there is a market. You can buy funds or fund interest. You can co-own real estate. You can go directly. You can go into the listed space. But what technology needs to do is to add another layer of efficiency and potentially have access to, if you like, Janice, kind of technology investors who like the technology element of investing. And now you bring an old-fashioned asset class, which can be perceived as illiquid, into the fray. Ultimately, you do want to think about over time for there being a secondary market where you can buy and sell these tokens. So that must be the natural evolution.
King, what do you think? Do you agree with all of these advantages? Is this something that investors want, especially investors in and out of Hong Kong?
Well, I guess the people today, investors today, are in a way forced to look for alternatives, right? In a low interest environment, everybody is looking for yield. So if having tokenized properties mean that there are some properties that are offering good return, of course, right? I mean, at the end of the day, is what the investors can get out of it. So in some ways, it has something to do with the pricing. So the technology is just a matter of making those properties more accessible. But then if the owners don't want to offer attractive price points, the technology wouldn't help them. So I guess the first point that I want to make is that definitely this is a great innovation that allows, particularly today, right? I mean, some commercial property home owners in Hong Kong are probably cash strapped. So now with this new avenue, perhaps they can have another way to, I guess, create some liquidity. And as such, if they are willing to offer like a more attractive price points, then naturally the investors would listen. So I think it's just a simple fact that this is a new way to create new access. So the short answer is yes, but it depends.
You bring up an important point there. One of the points that I think Scott mentioned in his slides was that the tokens, depending on what you bake into the smart contract, would give you real-time valuations and therefore transparency in the price of the real estate. How would that work in real life? Scott, Shashila, do you have anything to comment on with that? I mean, can you really just go online and look up how much your token is worth tied to the property and then therefore negotiate a price?
I think to answer that question, I think you need to look at how any interest that you hold in real estate is valued today. It is no different because there are really 3, maybe 4 types of token interest. One could be an equity token, which is very similar to having an interest in shares, interest in a company that perhaps owns the real estate. So that has a valuation mechanism anyway. Another way would be to own tokens that represent debt. So you perhaps are a lender into a project, and in return for lending, the token represents a return at a fixed interest, and there is a way that you know how much you can buy and sell because that has a price associated with it. So it's not a new way of valuing. What technology might bring is a more quick way of getting that valuation automated, perhaps is a better word. So I don't think we are trying to create new ways of valuing. And don't forget, real estate is an archaic, highly investable. It's had lots of history. So what tokenization, to King's point, doesn't create a new product per se. The investment has to still be good. The real estate still has to be good. All the fundamentals of the real estate still has to be there. With the efficiency brought about by technology, whether it's transparency or operational efficiency, it might be able to cut a degree of management costs. And I might also suggest one other avenue, because we are in a world of rapid changing currency, if I can say that. And one of the things that I think would be attractive to those who like the technology space and see it as the future is we have these cryptocurrencies, and you can have your view about these cryptocurrencies. But I might even suggest that one way to make your investment into token is to use a cryptocurrency like Bitcoin to make an investment. That's also another avenue for investments that could open up.
Let me just add to that one as well. I think there's likely to be the issue around liquidity is volumes as well in market makers, and that part of the ecosystem in some respects doesn't fully exist, certainly not in Hong Kong. I mean, we have one regulated asset exchange. I don't know whether it's 1 or 2 assets they have on there, but it's not a marketplace at this point in time, and that's really going to be required. I mean, medium term, I think the idea of having something that looks like a cryptocurrency exchange but has regulated asset, real estate asset-backed tokens trading on it, then absolutely you've got a 24/7. What's the price of the building, or what was the last token worth? How many tokens represent that building? Multiply the 2 together. That's the value of the building today. And as I understand it, in Hong Kong in particular, a lot of real estate companies or assets that are traded on the stock exchange don't trade at anything like their real market value of the actual underlying asset in any event. So it's the idea that there's proper transparency on the Hong Kong exchange is something of a myth from what I understand. But while and until those sort of local exchanges get going and we have sufficient assets, sufficient liquidity, what we're beginning to see is the emergence of decentralized trading systems. I won't name names on this one, but we were exploring with one only last week, and anyone can, it's not run centrally. So it's a decentralized exchange based on the creation of liquidity pools by people that have security tokens. And they are then able to connect with investors who then settle on those liquidity pools in a way that creates a marketplace. And that all sounds a little bit theoretical. And so we were delving into it, and they're running at about $1 billion US a day in actual transactions already. And this is for security tokens. So quite an interesting development that a fully decentralized market has already started to spring up. Now, what's going to happen with an iconic piece of Hong Kong real estate that gets tokenized? Is it going to end up on one of those decentralized exchanges, or is it going to end up on something that's regulated locally in Hong Kong by the SFC? I think if the SFC doesn't support creation of that ecosystem, I think we'll soon work out the answer. And we're seeing the same with cryptocurrencies. I mean, again, we're starting to see suggestions that cryptocurrency regulations coming through the FATF controls and the need for KYC/AML requirements. If the SFC, does impose its will that exchanges in Hong Kong will no longer be able to service retail investors for buying and selling of cryptocurrencies, I don't see people in Hong Kong stop buying Bitcoin. They're just not going to do it through an exchange located in Hong Kong. So I think there is there's a reality check here that either the ecosystems get created locally or the markets may move elsewhere, because these are extremely dynamic and fluid assets in digital form. They by definition, they're not bound by geography, notwithstanding that the underlying asset is obviously rooted in the ground somewhere.
Mm. But what does that mean? I mean, you just said recently that security tokens have recently been made legal in Hong Kong, whereas before they weren't. They were bound by the same.
Made legal. We now have a regulated one party in Hong Kong has the ability to act as a dealer broker for digital securities, and that same entity has the ability to run a digital asset exchange in Hong Kong for those regulated securities.
So is your view then that there aren't necessary regulatory and legislative changes that need to be made in Hong Kong to make it more competitive, that we can, so long as they issue more licenses so that more people can play in this space, that it would be enough to make Hong Kong competitive? I mean, there are some views online when I was reading up that it's a bit contradictory, that some people feel that there shouldn't be any regulation of tokens, that, how can you achieve regulatory alignment when blockchain-based platforms are supposed to be, on the face of it, decentralized?
Sorry, you go, Cecilia.
Yeah, so in the non-token world, not everything is regulated, right? So what is the security needs to be considered? And actually, let's talk about the world where private companies can distribute and deal with their own shares. So I think that the same protections for the retail investor needs to be put in place in the same way that the market needs to adjust if professional investors can indeed buy and sell tokens in a private company, whether they're debt or equity tokens. So that you don't need new regulations to deal with many years of understanding how to protect investors. So that's already in place. If you're saying whether sort of because digital tokens are digital and therefore you need another layer of legislation, I think the relevant regulatory bodies in Hong Kong has dealt with that. They've put sort of papers out on how to deal with that. So there is that kind of indication of what digital token issuers or exchanges need to have. So there is legislation. So if you're saying Hong Kong should issue more licenses, ultimately, if they feel comfortable with the entities, I think that will be their plan. I don't think you need to have more legislation to dictate what can and cannot happen at this point.
Right. But if Hong Kong doesn't have, the existing Hong Kong real estate legislations on ownership and registries of ownership in Hong Kong are notoriously, I suppose it doesn't have a system of irrefutable proof of ownership. So how would you build in this on the existing technology that did exist prior to tokens? Hong Kong wasn't as modern as it could be in that respect. So then how would tokens and blockchain fit into the existing land ownership system? And what I heard Scott saying before, and what you were saying about the different types of tokens, they're not about actual fractionalization of legal ownership of the piece of land, is it?
Well, for real estate, no, because real estate, and it's not unique to Hong Kong, real estate in many countries is highly regulated because it's ownership of something that has a registry to record ownership. So not all assets are like this. And so Scott mentioned tokenization of the physical art. So art doesn't have a registry of ownership, and many other assets fall in that category. So you're right, real estate has got a land registry, which deals with title, and the fact that it is not proof of title 100% guarantee like some countries is not necessarily going to change, and tokenization isn't going to do that change, not today. So what you do is, and so as an investment lawyer, you look at tokenization as a means of which to divide interest. So it can be held by many players who want to have ownership in this divided fractionalized interest. But what you don't want to do is to change what is already a working and trusted system, which is ownership of the physical asset. So I think the tokenization that we are talking about has to be within the regulatory regime, and the regulatory regime has already set out what a security is, what a security isn't, and it's very clear. It also talks about now, with the issuance of the first digital type 1 and 7, that you need to have, if you want to buy and sell tokens, which are not in a private company, type 1 or a type 7. So it does talk about that. And it is right. It is right that ultimately it is protective, and there is a regulatory framework to work with. You're not going to change the land registry, not today. And hopefully one day, even Hong Kong will have a system that will progress with over time. It's just that there are so many different types of interest in Hong Kong, and that's the way the system works. But when you own a token, whether it is an equity or debt, you can sit outside that or above that, if you like. You can do it in terms of the company, where it's a debt interest in the company or an equity interest in the company. An equity interest or token displaying equity interest in a company has to abide by Companies House rules. So you can't sidestep that.
Scott, did you have something to add to that?
No, I'll pass on that one. I'm quite excited about some of the questions coming in.
Okay. Well, we talked about the investment managers and the investors and even real estate owners and how this is advantageous to them. But King, because this is an alternative way to fundraise, how should the financial institutions adapt to this token economy? What should they be thinking about and maybe doing in this space so that they're not left behind in the dust?
Well, I guess the race has already started. Although most of the investment banks or the private banks, they are not making public announcements yet, but just through the anecdotal comments I heard from talking to industry practitioners, some of the more forward-thinking banks are already reaching out to the tech providers in looking at offering this kind of services to the clients. Well, I mean, their private banking clients, for example, can be someone who own a lot of properties, and they may have the second or third generation who might be more interested about the cool things as opposed to the traditional way of making money. So naturally, if I were the private bank, I have to offer something that can attract their attention. So all these like new sexy buzzwords, right? The tokens and everything suits the bill. So that's why, just from what I know, I mean, it is already happening. It's just that I think it's probably not fully mature yet. So that's why we don't see as many public announcements. Another example is that I've spoken with the owner from a, I would say, second tier property, company in Hong Kong. I mean, pretty sizable, but nonetheless, it's probably second tier. And they've also been experimenting different ways to this whole innovation journey. So the one way that they did it, probably almost like 2 years ago, to my understanding, and that's even before SFC has granted the exchange license to that company that Scott mentioned. So at the time, because they want to make sure that they are doing things legally. So that's why when they tokenize the properties, one of the objectives is for them to, again, retain the talents within the company, and also to experiment a way to let the millennials, the younger generation, to get access to property at a more modest amounts. So that the way that they did it was basically to just tokenize some properties and given out the tokens as incentives, as opposed to like a year-end bonus to their staff. So in doing that way, they're not, so strictly speaking, they're not selling the securities. They're just mere distributing these as incentives. So again, I think this is a pretty interesting way to get things moving when the whole sort of legal framework was still in progress, I guess, under discussion. So now, I guess, as the word got out, I guess the second generation of the property tycoons, I mean, they basically, you talk to all these guys, they all take notice. Many of them are already looking into it. It's just that I think we haven't seen the announcement yet. So again, the banks are in it. They're figuring this out in serving their clients. More importantly, the second or third generation of the private banking clients.
Thank you, King. That is really interesting developments. So talking about existing and established establishments and how they are modernizing to sort of keep up with the times, I want to move on now to some of our panel questions. First one, in just an order of appearance, and the first one being law firms. I mean, they are not renowned to be quick moving when it comes to technology, although Scott, you are a technology lawyer, but why did DLA Piper create Toko? You know, no law firms are doing it, and it seems it would have required a lot of investment in programmers, tradition, and not sort of what a law firm would be normally expected to do.
Why did we is a great question. I sometimes wake up in the morning and think, why have I started this journey? But more often it's very obvious why we started it. It's DLA Piper has created a thing called the Radical Change Council, which was an initiative of our CEO, Simon Levine. I was probably, this idea was bubbling around already, but the Radical Change Council provided a good incubation platform for the idea. So we have got a fairly, yes, law firms are conservative. Yes, it has been an uphill battle to try and win hearts and minds to each of the gateway stages to get this done, because it has a very different risk profile, and it's a different set of skills to the ones that our business is used to dealing with. But we have got as far as we've got, and we're definitely going further. So it's there's a will to do this within DLA Piper that I think, frankly, a lot of law firms wouldn't have. So I understand that part of the question. Yes, we have had to acquire not only just programmers. I mean, my background, is in IT. I did do a computer science degree, but actually, it's not just there are programmers and programmers and programmers. We need to have blockchain architects. We've needed to have crypto payments consultants. We're now looking at DeFi solutions, which are really coming from that sort of crypto industry as well, but now looking at how we apply those things to security tokens. We've got traditional process engineer type programmers that we've brought in, and the last batch we've just brought in a UX UI, so the the interface, the look and feel of the Toko interface, the different persona views, whether you're an investor or an asset owner or a custodian, the different views that we're building in the Toko platform to allow the product, if you like, to function from the perspective of those who are interacting with it. So yeah, we've probably got somewhere in the region of 10 techies working on the project. And that is not a traditional law firm activity, that's for sure. But it is quite good fun. I mean, why did we do this? Because of the Radical Change Council initiative, which is really around the recognition that even we must evolve at some point. Change is inevitable. So we are looking to make the firm more relevant to our clients. I mean, one of the things for me personally is the role of the lawyer has diminished. Even in my career, we've gone from being trusted business advisors perhaps to people who paper the deal. There's definitely a trend in that direction for our profession. The rise of the big four, the consultants. None of them are any smarter than us. None of them are any more creative than us. It's just, I think, what's happened a little bit with the marketplace. And for me, this was an opportunity to recapture that trusted business advisor and solution provider, philosophy. And being able to do this plus law is something that those that are only doing this can't do. The complexity, we haven't been focusing on unregulated cryptocurrencies because there isn't a lot of legal issues in there, although it's beginning slowly, but it's not really a complex legal nut to crack. The complexity of the legal issues around a asset-backed regulated security contract are enormous, and they are multi-jurisdictional. And doing that within a DLA Piper, one of the world's largest law firms across 38 countries and 95 offices, puts us in a fairly unique position that we can grapple with that complexity of the regulatory issues while bringing the potential, efficiencies and opportunities of the technology together. And frankly, you don't get law firm level assurance around the validity of a smart contract from a pure technology company. Actually, this is a true hybrid skill that requires the lawyer and the technician to come together. So that's kind of the why.
Okay, Andrew, if buzz in the chat if you're unsatisfied or if you have any further questions with Toko, I'm sure Scott or Sheila would be happy to take on further questions on that. A quick question now from David: is there a digital wallet or secure storage for these NF tokens? The answer is yes.
Yeah, it's a great question, because actually the entire world is not yet built for the sophistication of Toko. So we're ready to spit out really sophisticated tokens using hybrid public-private chains, deploying them onto far better platforms than Ethereum in our view. But the world of custodians, dealer brokers, etc., aren't necessarily ready for them. So there's a big technology integration piece that's going on, and we're at the forefront of working with that technology integration piece, connecting up the dots, particularly with projects like the Hedera Hashgraph project, bringing some of the players that we're working with to Hedera and trying to integrate those tokens, for example. In the case, I think this question popped up when I was talking about our artwork. So I think it was around the non-fungible 721 token that we produced, which is an Ethereum deployed token, but it's a 721. Now, again, there's some complexity there. So the ability, we couldn't just drop this onto any token, onto any storage solution. Some wallet solutions do allow for this, so we use the Ledger Nano and the Decent device. So these are self-custody solutions, one with a password, one with a biometric control for people who wanted to store their private keys themselves. So we were able to integrate the 721 token onto both of those two self-custody solutions. We also offered, and this is again part of what we were doing in testing this with my partners here in Hong Kong. We also did roll out a solution, again, a Hong Kong provider called HexTrust, who we work with in Hong Kong, that we're able to handle a 721. There are some other trustees and custodians in this market that we've been working with, but they couldn't handle a 721. They only wanted to store an ERC20, and I wanted to do a unique NFT. So yeah, it's a great question, and it goes to the heart of the integration piece. Now, that integration piece is getting better every day, but it remains a challenge, making sure that whatever is minted can go right through the ecosystem.
Thank you, Scott. Next question, I think I'm going to go with: what are regulatory requirements for Hong Kong security tokens different from US jurisdictions like Wyoming? What differentiates Hong Kong in this space from more friendly token jurisdictions, I suppose?
First thing I would say is I'm not convinced the US is a very friendly jurisdiction. For starters, it's got its challenges. What we're seeing in the US market is a smattering of STOs, but they are complex because you have to use the the federal level SEC processes, and the Reg A plus and the Reg D solutions they work kind of, but it's a bit square peg round hole. There are restrictions on the number of investors. There are, for example, under US securities law, there are issues around resale of tokens within 12 months, for example, which is a US problem that we don't necessarily have here in Hong Kong. So I think many markets around the world have an imperfect framework for this at the moment. So Sheila, did you want to comment on any of the specifics around this? Or?
No, I can. I can't comment on US securities, but I would say most jurisdictions have the same conceptual protection of retail investors. So it's the same, and they have the same concept of what is a security, and security are regulated instruments. So if you start from this, the from basic fundamentals. Anything that is a security, which is a very defined term, is probably regulated. And most jurisdictions will have exemptions to that, where there are private company exemptions. So it's not unique to Hong Kong. It's very same concepts. And then the other thing that people should be aware of is collective investment schemes or equivalent. So you have this in many jurisdictions. If you have money that is pooled and third-party managed, the chances are it's a collective investment scheme. And if it's a collective investment scheme or equivalent, there are restrictions on how you market, the prospectus you create, and how you promote and advertise them. So these concepts are the same across jurisdictions, they're just labeled differently. So the same with tokens. If there's pooling of income and it's third-party managed and it's going to retail investors, and the exemption to these kinds of collective investment schemes is where they are going to professional investors. There are other sort of monetary exemptions, but as a rule of thumb, professional investors, and often these are specifically defined, they tend to create a safe harbor rule and takes it out of the regulatory regime in relation to promotion and advertising for collective investment schemes. They still are collective investment schemes, but some of the rules in relation to marketing and advertising, promotion, and what you need to put in your promotional material becomes less onerous. So I think all jurisdictions have those rules. They're called slightly differently, but it is all about making sure that investors know what they're getting into and have the information they need. And if you're a retail investor, there are more restrictions because you need more protection.
That actually takes us to the next question from Andrew. If this takes off, real estate tokenization, and proves popular with retail traders, bringing liquidity to the market, will the regulators move to block retail investors from benefiting from tokenized real estate, to only allow qualified investors and big players to benefit? You know, same as the recommendations for crypto trading, for example. King, do you have any comment on that?
Well, I guess I think generally speaking, the SFC has been very cautious in how they define the boundary. So obviously, when we work with our colleagues over there, they have done the homework. They talk to the other jurisdictions that launch regulations on the crypto exchanges, for example. So they've done the homework. At the end of the day, it's just a more prudent approach that they would definitely look at doing it with the professional investors first, and then if it runs for a while and nothing happens, then they would consider other measures, right? So, but then are we going to go there immediately? Most definitely not. Now, and secondly, when we look at just the way that security tokens are by nature, again, I think, by the way, what I'm going to say now is not representing the SFC. It's just basically common sense, right? Now, so the reason why I think the regulators are so, I mean, not just SFC, but globally, are so paranoid about cryptocurrencies is that it's not backed by anything, right? It's how much the investors perceived the value to be. So you can build it up, almost like to infinity. So as a result, I mean, it can be so highly volatile. However, for security tokens, just by the very nature of it, it's backed by something. So even though the people can overshoot the euphoria, so you can basically pay something more than fair value, but at least it's based on something. So the volatility will be less compared with cryptocurrency. So therefore, what I'm trying to get at is that when we look at how the whole thing plays out, so most likely, I think two things. Number one, now I think I'm just go by my recollection, because I haven't been following the regulations very closely. But to my recollection, the security tokens being able to be traded on the licensed crypto exchange, they have to be listed somewhere else for like 12 months. And then they can be traded in a Hong Kong based licensed digital asset trading platform. Now, so naturally, if something bad happens elsewhere, then I think there's a bit of a time period for those issues to surface. So naturally, I think that to my point is that SFC has been doing a great job to think about how best to protect the investors locally in Hong Kong when the whole thing is still emerging. So it's a journey. I just don't see that we can jump right into retail in the early innings in terms of like using the baseball analogy?
I think it's one thing to. I think there's a lost opportunity here. Hong Kong is a market with out of control real estate prices that the vast majority of people cannot get on the property ladder. The ability to get on a fraction of the property ladder would strike me as a wonderful opportunity for the people of Hong Kong to actually participate in the dream of home ownership. And by having a blanket ban, as they essentially effectively do on retail products, by saying real estate-backed tokens are securities can't be bought and sold by retail investors, I think there is a huge lost opportunity for social inclusion. But that's just my view.
Sheila, final word on wrapping up traditional assets inside of a tradable piece of code and its effect on the Hong Kong real estate market?
Certainly. Thank you, Janice. So today we've heard from Scott, who's very well versed on the technology and brings an energy and sort of a real sort of technology into an older asset class. You've got King, who's on the coalface and really dealing with people and you know the real incentive to change. And I come from a institutional investment background, a little bit more old-fashioned, but seeing that actually when you look at the exponential growth of change, perhaps made even faster with COVID, these are tools. So what tokenization brings about are tools in which people can really properly, and I emphasize this, properly enjoy safely this asset class in a way that will make it much more efficient and accessible to all. So if we do all the right things within the regulatory remit, and that's the point I want to make, you know, it is not cryptocurrency, as King says, not backed by something arbitrary. It is still backed by real estate, but the forum of which you use is still ultimately protected. I think this has legs, and you know, everything that we are trying to do as professionals is to create that environment to make investment better.
Thank you, Sheila, and thank you, King and Scott, for your time and answering all of our questions. I'm sorry to our audience that we haven't had a chance to answer all of your questions, but I'm sure if you ping them on LinkedIn or their email addresses, they might be able to answer your questions directly. Thank you for joining us, and thank you for Kancham for hosting this event. I'm sorry we're over time.
Thank you, Janice.
Have a great rest of your day.
Yeah, thank you.